Definitely something we'd like to take a closer look at.
Okay, good. Dan, we look forward to that. Many thanks. Dan Scott at the Frankfurt Exchange. Let's move over to the FTSE this morning. There you go. We are down just a touch, 0.2%. The tech mark is down 0.6%. A number of earnings numbers out this morning, among them Rolls-Royce and Stagecoach. Let's get out to Ian Hodgers, investment analyst at Barclays, to get the lowdown. Ian, Rolls-Royce, let's start with those. Has this company turned the corner as far as you're concerned?
Yes, I think it probably is turning the corner. Certainly on the face of it, these results are slightly above expectations and showing some encouraging signs in the sale of spares, which is really the critical element for Rolls-Royce. That's where it makes its money, and sales there accelerating 15% up on the previous year, which is higher than we've seen in the past. I think also the problems it had with the Trent engine, which gave rise to a £120 million provision in these sets of numbers. Those problems, I think, possibly are finally behind it, but we'll perhaps have to wait and see in that respect. And I think other encouraging signs in these numbers are the fact that the engine maintenance contracts are now being sold on 25% of the installed base, so really securing those valuable after-sales sales for themselves.
Ian, you and I have spoken about this, the level of disclosure, because I know Rolls-Royce has been criticised before on this. Is that improving?
It certainly is. Today's numbers are broken down, and we have the risk and revenue sharing numbers actually broken out for the first time, and elsewhere within these numbers the details are much better disclosed than they have been in the past, which I think will help analysts to actually predict the future much more closely and more accurately than they have done in the past.
Let's talk about Stagecoach as well, if we could. I know it's on the 250, off 16%. In effect, a profit warning from them. Does all that stem from the effects of the Hatfield crash?
Well, part of it is, but I think really that element should be seen as a one-off. I think more of a concern is really the problems in the US with its subsidiary Coach USA, which, unlike the rest of the group, is involved in sort of the tour operating side of the industry. And I think that's the element which becomes more discretionary and is an element which could really see a downturn when the US economy turns down.
All right. I want to talk to you as well about the reactions to what happened in the US yesterday in general for the techs. And the reaction to the Oracle profit warning. We've had emails in about this. Do you think that reaction is overdone? Ellison himself has... yesterday. Did that justify Greenspan's steady hand?
I don't think there was really much impact. We know that there's an industrial sector recession in the US, and the NAPM is just confirming that. We may well be at the bottom of this recession in sort of the February-March period. I think the major risk now is next week in the payroll number, and if we see actually a negative payroll employment report, then people will say that that industrial sector recession is spreading throughout the economy, and I think that would change people's views on where this economy is going. It's not V-shaped, more likely U or L, and that is another factor that might help the euro.
That's your official view, is it? Now it's a U, not a V?
Well, we've been on 2 negative quarters of growth for the US for several months now, so we've been at the very low end of growth expectations. So I think it is more likely to be U than V. It's the sort of the world of alphabet economics at the moment.
Yeah, really. We haven't talked sterling for a while. We're at 146 or thereabouts on cable. Run us through the fundamentals behind this one.
Well, cable is really at the mercy of euro-dollar, and that's why cable's doing quite well today. It's going up on the back of euro-dollar's rally. What we look at is the interest rate spreads, particularly where the market believes base rates will be versus the Fed funds rate, and that spread now is at about 60 basis points. That's a very bullish signal for cable. At the beginning of the year, I wrote a report that cable is the sleeping giant that should start to rally quite dramatically. Unfortunately, that moved against me in February, but I think we're now in the process where cable should do quite well if the euro is picking up towards the 95 area.
All right, Michael, many thanks for joining us. Michael Lewis from Deutsche Bank on the currencies. Let's recap the top stories for you right now. Nokia winning this Telia 3G contract. We'll get up to Copenhagen and talk with Rachel Grafton about that in just a while. Rolls-Royce sees growth in 2002. Analysts we were talking with this morning saying this company is now turning the corner. And German autos see some strong US sales, especially BMW and Volkswagen. Let's get you some world news. The latest on the foot and mouth crisis in the UK. Rachel Walton has the details.
Very good morning. Germany has ordered the immediate destruction of all sheep and goats imported from the UK in the last 4 weeks. It's an attempt to prevent the spread of foot and mouth disease spreading to the country. It's just the latest in a string of measures adopted by European countries to stop the UK epidemic from spreading outside of the UK. It's now officially spread to all parts of the country.
This is very serious. I had hoped that if we were able to regionalise the outbreak and could keep it firmly contained, then we could make a case for disease-free status for parts of the United Kingdom if we couldn't do it for the whole of the United Kingdom.
Israel's army says it's killed a terrorist this morning along a Gaza Strip road. It's been claimed he was planting a device aimed at blowing up Israeli civilians and soldiers. Comes after one person died in yesterday's van explosion in the northern Israel. The first major incident since a Palestinian driver smashed a bus into a crowd at a bus stop, killing 8. Yesterday's blast is being blamed on Palestinian Islamic militants, although the exact group responsible has not been identified. India is accusing the Taliban and Afghanistan of a regression into medieval barbarism. It follows this morning's news that the Islamic movement is destroying its ancient statues and preparing to demolish 2 world-famous representations of the Buddha at Bamiyang. Both statues date from the centuries before Islam arrived in Afghanistan. In response, India has offered to look after the artefacts for all mankind. The radical Taliban consider the images to be blasphemous. 3 of former President Bill Clinton's top aides have told Congress that they hadn't agreed with the last-minute pardon for billionaire Mark Rich, but believe Clinton made his decision based on the merits of the case. Apparently, the Rich pardon was discussed during at least 2 staff meetings before it was granted. A committee is investigating whether it was linked to donations by Rich's ex-wife, Denise. Rich fled to Switzerland 17 years ago to avoid prosecution. The Spanish government is going to announce a series of reforms to the country's labour laws this morning. It'll be acting unilaterally after negotiations between employer groups and trade unions collapsed last night after 8 months of negotiations. Employers have been seeking ways of cutting the cost of dismissals, while unions want to reduce the number of workers employed under temporary contracts. Spain has an unemployment rate of 14%. That's the highest in the European Union. 7 foreign oil workers kidnapped in Ecuador last October have been released after their company paid a $13 million ransom fine. The hostages were part of a group of 10 foreign workers kidnapped from an oil field owned by the Spanish-Argentine company Repsol. No one's claimed responsibility, though, for the kidnapping. Oil industry and military sources say they suspect the kidnappers are behind a series of deadly bomb attacks against Ecuador's main oil pipeline. And contract talks between the Writers Guild of America and the television and film industry have collapsed after nearly 6 weeks of intense bargaining. The breakdown deepens fears that Hollywood is headed for a crippling strike this spring. The key sticking points centre on residual payments, which are made as movies and TV programmes enter secondary markets like videos or TV reruns. Right, well, those are the world news headlines for this half hour. Let's have a check on the weather. Lisbon and Madrid will be cloudy with outbreaks of rain during Friday. Both Milan and Rome will be affected by outbreaks of rain. Athens, pretty much the only place dry in the whole continent. The North Berlin's going to be cloudy with outbreaks of rain. Scandinavia and the UK, further wintry showers. That's the very latest for me. Over to Axel.
OK, Rach, many thanks for that. Of course, we're watching ThyssenKrupp, the AGM. Lots of stuff coming through on this. Patricia, why don't you run us through?
Yes, let me give you the latest.
All of this.
Absolutely. The latest is actually that the dispute has been settled. Remember that we did have a dispute between the shareholders and the supervisory board chief there. The board chief didn't want to go. And now he will have to go on September the 30th. Maybe we could just put up what they are coming out with. Heinz Kriwet is going to leave ThyssenKrupp as a supervisory board chief on September the 30th. So that dispute has been settled. Remember, he wanted to hold and keep a key position on the board there, and also keeping about 9 directors on the board instead of 6. Remember that ThyssenKrupp is going through a huge restructuring program at the moment. They're coming out with figures as well, forecast for the next year, Axel, but I will bring all those details to you within the next half hour.
Patricia, many thanks for that. We're going to take a break, coming up to 10:30 in Central Europe. Plenty ahead. Do send your emails through. The CEO of CRC Group will be with us. We talked about this one earlier on in the week. Market Watch at CNBCEurope.com, the email address. David Staples will be talking telecoms with us. And in particular, we'll look at Telia with David and indeed with Rachel up in Copenhagen. Stay with Market Watch.
Traditional training programs can cost you dearly in time and money. Go from training downtime to learning online, anywhere, anytime. Let Cisco Systems help you discover all that's possible on the internet. Cisco Systems, empowering the internet generation.
The exclusive CNBC ticker, real-time live data from 14 major European exchanges. The dynamic top bar, real-time quotes of the most heavily traded stocks across Europe. A unique data stream, instantaneous, selecting the most active stocks from all the stocks traded across 14 European bourses. Powerful, displaying second-by-second coverage of the market action. It's real-time trading advantage. It's only on CNBC, the exclusive real-time CNBC ticker. Profit from it.
Earnings Watch. Can the UK's Thistle hotels rest easy? Or is the hospitality trade just too comfortable? Thistle Hotels. Full year earnings Monday on CNBC.
Morning everyone, this is CNBC's Market Watch. Just gone 10:30 in Central Europe. I'm Axel Throlfall. The top stories. Nokia is making some good gains today. It has won an order to supply Nordic-wide 3G network equipment to Sweden's Telia. 2000 profits rise in line with expectations as Rolls-Royce reaffirms earnings growth will resume in 2002. And Air Liquide posts 2000 profits above expectations. The French gases group is targeting growth of 50% over the next 3 years.
Good morning and welcome back. I'm Patricia Sava as well. Bit of a mixed picture really with regards to European bourses. This is the way we are trading. The SMI has turned into positive territory. Well, Oracle profit warned yesterday, but the technology sector doesn't care, up 1.6%.
Plenty going on this Friday morning. A number of other stories we are watching for you this morning. ThyssenKrupp, first quarter sales up 13%. Clearly an eye on this company as the AGM gets underway today. Aventis full year net up 51% and Iberdrola full year net up 16.7%. Swedish telecoms operator Telia chooses Finland's Nokia as one of the suppliers of its new Nordic-wide 3G network. That news lifting the group's stock. There you go, we're up about 5%. The value of the deal hasn't been disclosed. Nokia and Telia signed a letter of intent for the delivery of Nokia's advanced 3G network solutions in Finland and Norway. There's an additional option for Denmark if the operator wins a license there. In a separate statement, Telia said it signed a letter of intent with German telecoms equipment maker Siemens for UMTS infrastructure in the Nordic region. Quick check on some share prices for you. Telia up 9/10, Siemens also doing pretty well this morning over in Frankfurt, up 1.2%. Improved full-year profits at British aero engine maker Rolls-Royce. That's boosting the stock price this morning. The underlying pre-tax figure up 18% in line with analysts' expectations. Most analysts we've spoken to this morning saying this company is now starting to turn the corner. Rolls-Royce reaffirming 2001 earnings would be unchanged. Growth, though, is expected to resume in 2002. Chief Executive John Rose says a full order book means medium-term prospects are looking good.
Well, we continue to be as competitive as we can. I mean, our objective is to continue to grow our position in the civil market, where we've invested hugely in new products and capabilities. And obviously we'll benefit from the increase in the installed base that success has created, because it provides a really long-term, very secure aftermarket revenue stream. And our objective is to repeat the success in every sector that we're involved.
Air Liquide posting full-year numbers above expectations. Net profit up 16% to 652 million euros. The French industrial gases group is now targeting a 50% growth in net earnings over the next 3 years. It's also stepping up its share buyback scheme. Air Liquide is to double purchases of its own stock over the next 12 months. There's Air Liquide up 2.4 on the back of that, 157 euros and 20 European cents. Getting a bit of a reshuffle over in Amsterdam today. The AEX and a trainer are standing by over there. Let's have a quick check on some of the gainers and the losers. They're the gainers. UPC, ASM, Hagemeyer, Gucci and Philips are gaining in Amsterdam this morning. There are the losers. Wolters Kluwer and Numico are down. Ehon is off 1.9%. Aetna Trainer is over in Amsterdam for us. Clearly the reshuffle, Aetna, the key here. Run us through what's going on.
Okay, well, the reweighting of the AEX, obviously a big story today here, and this is the annual reweighting. It's going to happen this time every year. Under the rules, no company is allowed to hold more than 10% of the weighting on the index. This is based on the market cap, turnover, free float, and of course the velocity too. So now let's have a look at just where it's positioning everybody now. Big top five, actually: ING, Philips, Royal Dutch, ABN AMRO, and Echon. They're the big top five. But who's out? Interesting. Steelmaker Chorus is out, and the retailer Vendex is out. They won't be too happy about that, obviously. If nothing else, just losing prestige out of the index is not nice for them. But the ones who've come in, interesting, Telecom Group, KPN, Quest, but they've been trading a bit lower today. The data network group Versatel, they're in, have gained a bit of ground, and the business supplies wholesaler and office group, they're Burham, they've actually been gaining a bit of ground today too. So that's looking good for them. On the mid-caps, let's have a look there, because there's been changes within there as well. Tech's dominating here also. The new entries, the semiconductor maker ASM International, also BE Semiconductor, and the IT group Landis. Now, Landis is actually coming out with full-year results next week, and we'll have them for you. And SNS Securities this morning saying that rating a very strong buy on that company right now. Out of the mid-cap, Capgemini and the industrial group Stork. So they're the main ones. Let's take a quick look at ING, because this has been the big player throughout the year. They come out with results yesterday, operating profit about up 24%, but really didn't get the market that excited. It's been one of the most popular stocks. It was up to 15, but it's back down to 10, which it has to be. There's no choice there. However, ABN AMRO has upgraded that stock today. They've moved it now from a hold to a buy, and are putting a 6-month target price on that now of 94 euros. But it's in a bit of negative territory actually today. And Friesland Bank Securities are also agreeing there, saying it's a good buy, and this is the time to buy it. There could be a bidding war in the offering now for Fletcher Challenge. Royal Dutch Shell yesterday, Royal Dutch Shell and the American company Apache had upped their bid from $3.55 US, up to that from 3.34. So they're now offering 3.55. But just now, New Zealand's Peak Petroleum have come in to the war there, and they're saying they'll offer 3.85. So we're not sure yet if Royal Dutch Shell is going to come back on that one. And finally, just a quick look at one of the big gainers here today, ASM Lithography. Now, the Wall Street Journal has just issued a research, little bit of analysis here on the top growth stocks within Europe. And ASM Lithography, they say, is going to be one of the big picks. They're doing incredibly well. Very cyclical stock. It makes components for the semiconductors, which, of course, we know hasn't been too good. But it's actually up again today, but it could have further downgrades. They said to expect that. But if it goes down to 20 euros, they say that's the time to buy, and it can only go better. So from me here in Amsterdam, that's it. I'll be back later in the day.
All right, very good, Aetna. Many thanks for that. Aetna Trainer over in Amsterdam at the exchange there. Let's get out of Patricia a little bit more on this ThyssenKrupp story, Patsy.
Yes, it's a big
AGM meeting and numbers today.
Absolutely, yeah, first quarter numbers as well. But let me just give you the latest quotes out from Thyssen, the AGM today. The quarrel has been settled between the shareholders and the supervisor board chief, Mr. Krebet. He's going to step down. That has been confirmed on the 30th of September this year. And Mr. Gerhard Kommer is going to be the new supervisory board chief. He at the moment is actually co-chairman of ThyssenKrupp. With regards to the figures, this is what we are looking at. First quarter new orders were actually up 6%. Pre-tax profits up 0.3 billion. That is the level of it. But they're warning about economic conditions. They're going to worsen for the rest of 2001, and they weren't very specific with regards to what it actually means in terms of figures, but we're still watching very closely the way the shares are trading. Now we're gaining a little bit of momentum, up 1.4%. If we have today's graph, it's been quite a volatile session so far. It shot up straight away after the news came out, and it will be very closely linked to what is coming out of the AGM with regards to comments and forecasts for next year from ThyssenKrupp. But at the moment, a fairly positive, stable picture for Thyssen, up 1.5%. SAP, on the other hand, we were across that stock, and I'm going to come back to it, and I'm going to come back to it, and I'm going to come back to it, simply because it really is tracing what happened yesterday with regards to Oracle. Profit warning, a direct knock-on effect. 6.7% down. We were as much in negative territory as 8% earlier on. On the other hand, ST Microelectronics, traded in France, did not react at all, and it was in positive territory, even though really shrugging off what Oracle had to say. And that is what you call speculative buying with regards to ST Microelectronics. T-Logistics, they came out with figures down 7.3% at the moment. Full year EBIT actually increased a stunning 382%. Sales were up 288%. They said, on the other hand, that they're going to increase their own targets for next year. But I think what is dragging on the stock at the moment is that they're going to go and acquire a few competitors, a few companies across the board. They weren't very specific whereabouts, whether it's going to be just in Germany or whether it's going to be across Europe. But what that signals is that they are actually prepared to spend money within this year, and this is really bearing on the stock at the moment, down 7.2%. With regards to the DAX movement, at the moment absolutely flat. A sharp drop after a positive opening. Now we are more or less flat where it's going to go from here. As we have a look at the Nasdaq futures, let me just show you that one as a little interim here. Still negative picture, down about 2% or almost 2% for the Nasdaq 100. But still, let me give you the main gainers and losers on the German exchange. These are the top gainers so far. Deutsche Telekom up 2.4%. Epcos, Infineon, companies that had a bit of a tragic day yesterday. ThyssenKrupp, Siemens, up 1.5%. And these are the losers. SAP 6.4%, Lufthansa, BASF. Well, let's check in on the Nordic markets now and cross to Copenhagen with CNBC's Nordic, Rachel Grobson.
Yeah, thanks, Patricia. Well, we are seeing a very limited tech bounce at the moment in the Nordic region. We are in positive territory, although the KFX is being weighed down by ISS. That stock has basically, they reported this morning full-year earnings for the year 2000, which disappointed the market. They came below expectations, although they were up year on year. They reported a profit before tax, goodwill and amortization of 830 million kroner, and it was, as I say, just below expectations. There's been a lot of problems with this stock not being popular with analysts because they've changed their growth strategy from looking at operating margins to looking more solidly at aggressive buy-ups abroad. So, for example, last year in the year 2000, they bought something like 56 companies in Europe, particularly focused in Europe. They're trying to expand into southern Europe at the moment. As you can see, at the moment, it's trading down 9.3%. We will keep a watch on this, but of course our top story is, we've talked about a lot on the network, it is Nokia being awarded that network equipment deal from Telia for Norway and Sweden and possibly Denmark. Of course, the interesting thing here is that Nokia is doing very well on the back of this morning. It also rose overnight in the States with its ADR, so we were expecting Nokia to be up. But the interesting thing is, of course, that Ericsson has been snubbed with this deal. Siemens and Nokia are going to be the two suppliers for a general Nordic agreement. And before this, Telia has never made that kind of Nordic agreement. It's always negotiated its supply deals directly country to country. So, for example, in Denmark and in Sweden at the moment, it's Ericsson that is the preferred supplier. But Ericsson has not been chosen, and of course Ericsson would have been a very strong contender for this. Now, this morning Telia said that the decision to give the deal to Siemens and to Nokia was based on price, performance and delivery. So it is a direct snub really to Ericsson. We will wait to see exactly who gets awarded the network equipment supplier deal for that company that will be formed to have the UMTS license between Tele2 and Telia, because of course Telia in Sweden didn't get in their own right a license for 3G. On top of that, we're looking at IMO in Finland. This is a big loser today, despite being one of the tech stocks. It's a component maker for the likes of Nokia, but it is sliding this morning on the news that its merger with SSS Plastics over in the States may well have collapsed. That came after the news overnight that SSS Plastics had given a sales warning and had consequently decided to postpone its EGM on the merger with IMO. IMO has also said this morning it's coming out, it's not going to hold its EGM on that deal as well. So we wait to see, but it looks like that deal is in fact in tatters. So we are seeing in our region a basic tech upturn, but very limited, and we could well see it fade out throughout the afternoon.
All right, Rach, many thanks for that. Rachel Grafton in Copenhagen. Important stories coming out from the region. We'll talk with David Staples from Fitch about the Telia Nokia story, what it means for Ericsson. We'll also talk with David Ryan, CEO of CRC Group, about his company and the prospects. We were talking about CRC on Wednesday as a recovery play. All that coming up. Send in your questions. MarketWatch@cnbceurope.com is our email address. We'll be right back.
The CNBC ticker is sponsored by UBS Warburg.
Welcome back, everyone. Vodafone sliding on doubts over the Infostrada sale. Italian utility Enel is said to be seeking a €3 billion discount on the price it agreed to pay. There you go, Vodafone down 1.2%, agreed to pay Vodafone for the telecoms group. The rethink follows a ruling from Italy's antitrust authority, regulators demanding Enel reduce its stake in the country's electricity market. Now, people close to Enel say the utility stands to lose more than twice as much in revenues as it will gain from buying Infostrada. Meanwhile, Italian telecoms operator Albacom has emerged as a potential bidder for Infostrada should the deal fall through. David Staples, TMT analyst over at Fitch, joins me in the studio to run us through all of this, plus the Telia stuff, David, which is important. Quick word on Vodafone, if we could. Seems to me the focus here is, among the analysts, among the ratings agencies, the investors, is the amount of money they're pulling in from that, I think it was 11.6 from the Orange France Telecom deal. How much of an impact is this actually having on the share price, do you think?
Well, I think that, one of the challenges Vodafone faces is the general negative sentiment in the market. And Vodafone has clearly been quite volatile over other issues, not related to cash inflows from divestitures. I think Infostrada is going to get sold. It is not a core holding. I think if they take a $3 billion cut on the sale, it's really not going to have a material impact on Vodafone. They have a lot of cash coming in, the France Telecom stake. There are still other fixed line businesses in Germany and other markets that they've been talking about selling. There's a lot of M&A activity that they've been doing, but in the scope of things, I think it's investor sentiment that is driving the volatility here, and this is a mixing up
All right, very good. We got that out of the way then. Down 1.4, probably not so related to this. Let's talk about Telia and Nokia. We had the CEO of Telia on yesterday. Very mum about the deals they were making. They came out with this one today. Great news for Nokia, not so good for Ericsson.
Right. I think that Nokia has been another volatile story of late. People were very pro on Nokia going into the new year, and then there was this investor sentiment that turned away from it, partly related to concerns over telecom infrastructure spending by the big players, but also the recognition that everybody is competing for these 3G contracts. And much of Nokia's growth is going to be handset, but they're seeking to take increased share of the infrastructure market. 3G infrastructure contracts are key, and here they've won a contract in Ericsson's home market, which I think will say a lot. Ericsson has been the leading infrastructure supplier up until now.
Do we know how much this deal's worth?
Not yet. As far as I've seen, there hasn't been any disclosure.
There hasn't been, no. What kind of a number do you think we're talking about?
Well, it's very hard to tell because Telia is not building out its network alone. They are doing it in partnership. When they did not win a 3G license, they agreed to team up. And so it's hard to, it's not going to be this normal large contract that a standalone operator in another market might have. Now, Sweden has required material build-out of their market for those license winners, but there is the ability for them to share infrastructure.
We spoke with Marianne Niever, that's her name, I was trying to remember that, about GPRS and the handset providers. Again, pretty mum on who would be those providers. Nokia is bound to be in there somewhere as well, isn't it?
Nokia is the leading handset supplier of second-generation handsets. It is natural that given their investments to transition into 3G as well as 2.5G, that they are going to be a leading supplier of GPRS handsets. I think most operators are going to seek to have multiple suppliers of handsets, and all of them are competing to provide GPRS. There are some sort of launching problems that people are running into. They ran into delays on the launch of WAP. We expect to have delays in the launch of 3G as these, but I think Nokia, #1 supplier, they've been very innovative in their handsets, and I would expect them to be the leading supplier there as well.
One more on Telia, David. Tele Denmark. Again, yesterday we spoke about Tele Denmark and Telia. We spoke about Sonera and Telia. Are they going to do a deal with them? Would it make sense for their overall strategy? I guess it would in the Nordic region.
Telia has been seeking to be the leading consolidator in the Nordic markets. The deal that they'd had with Telenor fell apart a year ago over as much politics as it was culture, but it wasn't so much economics that got in the way of that transaction. Telia wants to be in the lead. We've got Sonera as a possible party where the Finnish government is seeking to supply partners, but SBC Communications, I would expect at some point is going to sell out. They have the material stake there. SBC doesn't face the constraints that others that would force it to sell on fire sale prices, so they are going to seek value, but they're a commercial seller and they will do a commercial transaction. Telia, I would think, would be the natural partner.
Okay, good. We'll have to wait and see. Many thanks, David, for coming in.
David
Staples from Fitch on the telecoms. Right, in our regular penny stock section Wednesday, we talked about up-and-coming UK firm CRC. No longer a penny stock, very much a recovery story, this one. The company services and repairs electronic equipment and computer parts. Full-year figures released this week put pre-tax profit for the period up more than 100% to £1.97 million. We are joined now by David Ryan, who is CEO of the company, came in November of '99. All part of the recovery play, I guess, the new management. We'll talk about that in a minute. I want to segue here on the Nokia story. You do quite a lot of work for Nokia.
A lot of work for Nokia, yes.
How worried are you, though, about the general malaise we're seeing in the market, the investor sentiment in the market?
I'm not so much concerned about investors because, of course, we do work for people that buy mobile phones, and we see that business continuing very strong.
You talked in your release about enhancing shareholder value through acquisitions. Who are you looking to acquire?
We're looking to acquire businesses that would extend our technology or extend our customer base from where we are today. We've got very rapid growth from our existing customers, but we like to do more geographically into Europe.
All right. Well, we talked about your stock Wednesday, as I just mentioned. It has done extremely well. Couple of issues, though, that some people have had, and that is the low PE ratio in comparison with your competitors in Europe. They're at 50 times earnings. You're at around, I think, 10 or 12.
15 on historical, yeah.
15, okay. And then the other issue is the operating margins, quite low as well. What are you going to do about these things?
In terms of the PE ratios, I mean, our business is growing organically faster than the main European competitors. In terms of profit margins, at the end of the day, we generate a hell of a lot of cash on our margins, so we're not uncomfortable with the margins, but we've said that we can increase them. We increased them by 1 point in the last year. We would expect that sort of increase going forwards.
They probably won't get to the European levels, though, will they?
I don't need it to be at 50, but certainly it should be a heck of a lot better than 15.
All right. It is an outsourcing story, really, repair work. Who are some of your other clients, aside from Nokia?
Aside from Nokia, we have clients like Pace Microtechnology, digital set-top boxes, Sun Microsystems, Philips Mobile Communications. Strong technology leaders, strong branded companies.
Any plans to go across the Atlantic?
That wouldn't be our first step. We're still at 54 million turnover, a fairly small company.
I mentioned at the start, we spoke about this as a recovery play, CRC, very important part of that when we're looking, when investors in penny shares, for instance, are looking at recovery plays, is a change in management. Is that fully instituted now, that change in management, or are we expecting to see more in the months ahead?
The management change is very much fully instituted. When I came on board, one of our initial founders, Pat Conifray, agreed to help the transition. He's now stepped aside and we're searching for a sales marketing director. But other than that, the team is strong on board.
Actually, one more. Who are your major competitors in the UK?
Major competitors in the UK?
In the UK.
We don't really have competitors with our range of business in the UK. The European competitors, Anovo, French company, EMTS, an Austrian company.
All right, David, many thanks for coming in. David
Thank
Ryan,
you.
CEO of CRC, with us in the studio, a company we did talk about earlier on this week. Let's recap the top story for you, the top stories for you very quickly. There you are. Nokia winning this Telia 3G contract. Rolls-Royce apparently turned the corner now. 2002 growth hit season. Air Liquide full year beating forecast. That is helping that stock this morning. Right, let's get some world news for you. Rachel Walt.
Hello again. Germany has ordered the immediate destruction of all sheep and goats imported from the UK in the last 4 weeks. And today, Belgium is set to slaughter 1,200 sheep imported from Britain. They're just the latest in a string of measures adopted by European countries to stop the UK foot and mouth epidemic from spreading onto the continent. The disease has now officially spread to all parts of the UK. Israel's army says it's killed a terrorist this morning along a Gaza Strip road. It's been claimed he was planting a device aimed at blowing up Israeli civilians and soldiers. Comes after one person died in yesterday's van explosion in northern Israel, the first major incident since a Palestinian driver smashed a bus into a crowd at a bus stop, killing 8. Yesterday's blast is being blamed on Palestinian Islamic militants, although the exact group responsible has not been identified. Now, India is accusing the Taliban in Afghanistan of a regression into medieval barbarism. It follows this morning's news that the Islamic movement is destroying its ancient statues and preparing to demolish 2 world-famous representations of the Buddha at Bamiyan. Both statues date from centuries before Islam arrived in Afghanistan. In response, India has offered to look after the artifacts for all mankind. The radical Taliban consider the images to be blasphemous. Now, the Spanish government is going to announce a series of reforms to the country's labour laws today. It will be acting unilaterally after negotiations between employer groups and trade unions collapsed last night after 8 months of negotiations. Employers have been seeking ways of cutting the cost of dismissals, while unions want to reduce the number of workers employed under temporary contracts. Now, Spain has an unemployment rate of 14%, and that's the highest in the European Union. Now, 7 foreign oil workers kidnapped in Ecuador last October have been released after their company paid a $13 million fine of ransom. The hostages were part of a group of 10 foreign workers kidnapped from an oil field owned by the Spanish-Argentine company Repsol. No one has claimed responsibility, though, for the kidnapping. Oil industry and military sources say they suspect the kidnappers are behind a series of deadly bomb attacks against Ecuador's main oil pipeline. Meanwhile, in the US, contract talks between the Writers Guild of America and the television and film industry have collapsed after nearly 6 weeks of intense bargaining. The breakdown deepens fears that Hollywood is headed for a crippling strike this spring. The key sticking points centre on residual payments, which are made as movies and TV programmes enter secondary markets like videos or TV reruns. Right, that's the world news for this half hour. Over to you, Axel.
All right, Rachel, many thanks for that. Coming up to 11 in Central Europe. Plenty ahead. Jeremy Batson on the UK market when we come back. Plus, the CEO of Compass, Mike Bailey, will be in the studio. There's the email address. Back in a minute.
When I think of the wind, I sense the power of nature, sight unseen. My dream is of a new wind, a peaceful gathering, an elegant flow. Creation of the serene.
Want to know which funds to put your money into? Then let Power Lunch help.
Every week with Standard & Poor's, we'll give you the lowdown on the best and worst performing funds.
Find out which sectors are the ones to put your money in and the fund managers to follow.
That's every Friday on Power Lunch Europe on CNBC.
Frankfurt, live. Berlin, live. Paris, live. Brussels, live. London, live. Amsterdam, live. Live cameras from key European cities. Real-time connections. The people, the places, the issues that are moving markets. Essential real-time data. CNBC. Profit from it. The CNBC ticker is sponsored by UBS Warburg.
Morning, everyone. This is CNBC's Market Watch. Just gone 11 in Central Europe. I'm Axel Throlfall. Our top stories this hour. ThyssenKrupp says long-term synergies from the group's 1998 merger will be significantly better than forecast. Nokia is making gains. It's won an order to supply Nordic-wide 3G network equipment to Sweden's Telia. And 2000 profits rise in line with expectations as Rolls-Royce reaffirms earnings growth will resume in 2002.
Good morning, and I'm Patricia Sabas. Well, it's a bit of a mixed picture across European bourses, but I can tell you something. Look at the technology stocks. The sector has really gained momentum, up 3.7%. Amongst the main gainers, Nokia, Marconi, and Ericsson.
Some of the other stuff we are watching for you this morning. There you go. Air Liquide full year net is up 16%. Shares reacting well to that. Aventis up 51%. And Iberdrola full year is up almost 17% this morning. ThyssenKrupp is on the rise in Frankfurt. Big day, of course, for ThyssenKrupp. That's after predicting synergies from the group's 1998 merger will be significantly higher than planned from 2003. But the steel and engineering group warned that earnings will be flat this business year. That's due to deteriorating market conditions. Profits for the period are expected to match last year's results. Boardroom struggles that have plagued the company are also now said to be over. Supervisory Board Chairman Heinz Krivest will step down at the end of September, making way for the current co-CEO Gerhard Krommer. Swedish telecoms operator Telia choosing Finland's Nokia as one of the suppliers of its new Nordic-wide 3G network. That news is lifting the group's stock this morning. The value of the deal has, though, not been disclosed. Nokia and Telia signed a letter of intent for the delivery of Nokia's advanced 3G network solutions in Finland and in Norway. There's an additional option for Denmark if the operator wins a license there. In a separate statement, Telia says it signed a letter of intent with German telecoms equipment maker Siemens for UMTS infrastructure in the Nordic region. Both those shares, Telia and Siemens, doing well this morning. Siemens up 2.7 in German trading this morning. Gaining full-year profits at British aero engine maker Rolls-Royce, the underlying pre-tax figure up 18%, in line with expectations. Rolls-Royce reaffirmed 2001 earnings would be unchanged. Growth, though, expected to resume in 2002. CNBC's Mike Gregson has spoken with the head of the company. Joins me now. Mike, from the share price, it does seem to me that the markets, investors like the numbers.
Oh, absolutely. I mean, if we look at the chart, if we look back to August the 24th last year when they issued a profits warning, the shares then took an absolute hammering. So much so that later on the company was knocked out of the FTSE 100, which John Rose told me this morning was a terrible psychological blow for the company. But since then they've clawed their way back up, and the share price is at, well, safely above the £2 level this morning.
Sure, yeah, look at that, £2.10.
Absolutely, doing very well. And that's partly on the strength of a very good order book.
All right, yeah, I was going to come on to the order book. It's important. In the studio, Mike, thanks for coming in. Lots for us to talk about. Let's start with a reaction to that. Came pretty early, that clearance. Were you surprised by that?
I was, actually. Very pleased, too. Normally, it can take 3 or 4 weeks to get, but it was much quicker. I think probably on the basis that our healthcare business in the States prior to this move was quite small.
Yeah. How important is it for you to be in the leading position in the US healthcare business?
Well, it doesn't actually put us in the leading position, but it does put us fairly close. In most of the US markets, we've got a number 1 or number 2 position, be it vending or business and industry. But in healthcare, we were 7 or 8. This puts us at number 2. Our business is about scale, and in that respect, it's important for us to be there. It's a $16 billion a year market that's only 30% contracted, and the company we've bought, Morrison's, has been the fastest growing healthcare business. So in that respect, it puts us in a very strong position.
Just as an indication, I guess, as to how relatively important these markets are, a number of deals, the Morrison management deal, the Selector deal in Switzerland as well. Anything more coming up?
Well, we did announce this week a small joint venture in Abu Dhabi with the Abu Dhabi National Hotel Company. Joint venture for about 17 countries in the Middle East. Fairly small deal in overall terms, but quite strategic for us.
Integrating food service and vending seems to be the way you've done it in the US. Is that the type of strategy you're looking to do in Europe as well?
It is. It's the exact same model. The States has gone well for us. Our organic growth is probably about twice that of our competition, and we do believe that's as a result of bundling food and vending together. We see opportunities for that in Europe, and that's what's driven us to take the step with Selector and buy the other 2/3 that we didn't already own.
How serious are you about the roadside catering side of things? Is there really a lot of growth potential there for you, or are you looking to move slightly away from that, more into the outsourcing, the vending, as we've seen in this deal here?
We're actually pretty keen on the roadside business. It's not dissimilar from our airport or rail business. It's feeding the general public on the move, and quite frankly, at the moment, we're very pleased we've got it. If you consider some of the obvious issues that have been there on the rail in recent months, a lot more people have gone to the road. And as a result of that, we've been able to take advantage of that situation.
All right. We've got to talk hotels, of course. The Meridian chain, the post houses. Nothing yet on that front. How far off is that is a deal. I think Marriott have offered, what, $3.5 billion? Is that enough for you?
Well, obviously it's difficult for me to comment in the middle of the process on the runners and riders and the numbers, but certainly we're pleased the way the process is moving ahead. It's taken a little longer than we would have liked, but that's as a result of the level of interest and the fact that the various companies involved, rightly so, wish to visit all the various properties and so forth. But I'd expect that we'll bring the situation to a conclusion by mid-April.
But Mike, if you didn't get $4 billion, would you be disappointed?
$4 billion?
4.
I'd be very, very pleased if we got anything like that sort of number. The market's been suggesting $3 billion is the number, not 4, and we'll see. It's not over until it's over, and the check's cashed in the bank.
Sure. And are shareholders going to get some cash back after that?
There's obviously a possibility. It depends on the number and the situation. We have said that we want to pursue probably up to about $2 billion in infill acquisitions, strengthen the balance sheet, and we would also consider the situation as far as shareholders are concerned and some sort of payback.
Okay. Back to the catering. I think you cater Twickenham, don't you? Do you cater Cheltenham as well?
Yes, we do.
So how badly affected are you by the foot and mouth?
Well, as far as foot and mouth is concerned, it hasn't impacted our business greatly. There have been a couple of small horse races cancelled. Cheltenham is still scheduled. Twickenham is still scheduled tomorrow.
Could go wrong, though, couldn't it? If those two big events go wrong, that's going to hit you quite hard, isn't it?
Well, we actually cover ourselves on insurance in those situations, so the reality is, from a business perspective, we would be okay, but clearly they're major events, and we hope they do go forward.
All right, Mike.
Such that should be our first priority, that the markets will adjust, that is, new benchmarks will arise. You will get the private markets creating near riskless securities, quadruple A securities, so that while it clearly would be better, other things equal, to have that debt out there, other things are not equal. And the other things that are not equal is the value of having a very negligible amount of U.S. Treasury debt outstanding.
Thank you very much. Mr. Benson.
Thank you, Mr. Chairman. Mr. Chairman, always good to see you. I want to follow up briefly on the point that you were just getting on, and I'm going to ask a couple of questions for the record on that. I did read your testimony from a couple of weeks ago before the Senate Banking Committee, where you talked